Good morning, traders and investors. It's Wednesday, July 9th. Taking a look at the charts. Let's start off with precious metals. We are seeing metals move a little bit lower again today. We've got gold down 0.5%, silver down 1/4. More or less, money is kind of flowing into the equities markets. We're seeing money flow out of gold, silver into equities. We've seen some short-term panic selling, which nobody really picked up on, and it's kind of convoluted or camouflaged in with the small caps in terms of for the stock market. But if we take a look at gold and silver, really they're still trading sideways in this range. Gold with a very large pattern here pointing to much higher pricing once it breaks out of that bull flag pattern. Silver has a bit smaller of a pattern in terms of time-wise. It hasn't been trading in sideways as long, but overall it does have a bull flag pattern. Gold actually has a much larger potential upside. Silver has about 10% to pop based on this bull flag pattern, and gold has potential to rally like 25%. So as much as I thought gold was going to top out a long time ago, it still wants to continue to be in favor. We talked about how it's similar to the 2007 market top, and gold and silver could continue to actually push higher with more uncertainty hitting the markets and the trends at play. Now, let's take a look at the overall equities market here and just kind of give you a breakdown of the short-term analysis. So obviously on the left here, we have the 30-minute chart, just regular trading hours with our panic selling and our FOMO indicator. And of course, our overbought, oversold on the charts are telling us when the markets are ready for bargain hunters to step in and bounce, or when it's ready to get sold off in a market. And then of course, we have the daily chart here. And if we were to look at the daily chart, I mean, this is where the analysis that we have really breaks things down from a granular level. So actually, let's take one step further back. We look at the long-term chart here of the weekly chart of the S&P 500. Of course, as you probably know, if you follow me, we want to know if we're in a rising environment, if we're in a falling environment, and if is the tide going up or down with the stock market. So we're in a new rising tide environment. We never know how long it's going to last, but we are back into an uptrend from a long-term standpoint. Now, if we drop down to the daily chart, we can see here we broke to new all-time highs. We have obviously shorts covering, which is creating some buying. We also have FOMO. Those who aren't long and missing out are now hitting the breaking points. They're piling in and they're helping drive the market up. So that was the quick first week of unwinding of shorts and FOMO reaching investors to get back in. And now it's putting in a little bull flag. Market is still primed and ready to continue to push and pop higher, but it's taking that little bit of a pause and a pullback I talked about a few days ago, saying just expect some type of pause or pullback because it's had a very strong, really from this low, it's had a very strong move to the upside. So the daily chart gives us a good feeling of kind of where we are. We're at all-time highs. We have a bull flag pattern. And then if we drop down to the 30-minute chart, now you'll notice the cursors move together. If you know what, when I hit record on the screen, the cursors don't follow each other. But more or less, this low over here in the market is this low over here as well, where the market drops down into this oversold market condition, telling us that, hey, we should see some type of bounce and rally from the 20-day moving average, which is this pink line, and this oversold condition. If we were to zoom out and go a little bit further, you can see we have another oversold market condition back over here. And of course, we had a big rally. And of course, that coincides with this bar right over here. So the daily chart gives us the overall view. We got the weekly chart for the tide. We got the daily chart for the trend. And then we have the short-term momentum of when things are oversold and they're ready for some type of bounce and move up. Now, if we were to kind of go back and look at this falling market environment, let's just scroll back, into that time frame. So if we scroll back, you can see here we have the market rolling over. If we put the cursor here, we went to orange bars, and then we went to red bars, which coincides with more or less the trend changing and changing direction, which we can see over here with the S&P 500. We had the trend change for our overall strategy as well. The timing was very similar there. And of course, the market goes into a downtrend. We have a first big leg down, and then you'll notice here the market got into an overbought market condition, and then it sold off. And it continued to sell off even more. And then, of course, if we zoom in, there was another condition right there. Of course, instead of lime green being oversold, we have these red areas saying it's overbought and the market should sell off. So that's what this 30-minute chart gives us, these levels. Tells us when trends are changing, momentum is changing, tells us when things are overbought and ready to sell off. It also tells us when things are oversold. It tells us when there's a trend change coming in place and things should be bouncing. And so that's what really gives us a good vibe on the market. Now, from a short-term standpoint, let's look at the Russell 2000. Let's just zoom into the most recent price action here. We actually had panic selling 2 sessions ago. Most people didn't really notice it. It was the Russell 2000 was down like 1.5%. It had a pretty big sell-off. The Russell 2000, we just saw a lot of panic selling on the New York Stock Exchange. People were dumping shares. The Russell 2000 shows a good visual of this, and we closed at a panic selling level. And then, of course, we usually expect some type of bounce after that. And that's exactly what we've seen. We saw the same over here about a week ago. It dipped down into a low here, had some panic selling. And then, of course, the market had a quick bounce after that. Now, it's gone a whole lot higher, but typically these short-term bounces are just good for 1 or 2 days. They can kickstart a much larger move, but it doesn't. You shouldn't expect much. You should expect just the next day to have a bit of a bounce. Anything after that is just pure bonus, and you can't really count on it. These overbought, oversold conditions, when we're in an uptrend, when the bars are green, we're only looking at panic selling. We don't care about FOMO. When we're in an uptrend, we're going to constantly be hitting FOMO. And it really is just showing us that people keep pushing money into the market, and it doesn't mean it's going to roll over. It might mean we're going to go sideways for a little bit and take a bit of a pause, but it's definitely, we don't pay attention. We want green bars, and we focus on green panic selling when we are in, let's just go back to red bars here, just so people get an idea of this. When we have red bars, let's just, where are we here? I'm lost our chart. Here we go. When we have red bars, and let me just zoom in a bit. Red bars, we're focusing on the FOMO indicator, telling us when there's some short-term overbought levels in the market. We have the red shading. Usually it means you're going to have a quick type of pullback. Some of them obviously turn into something much bigger, but we don't care about panic selling because the tide is down. There's going to be constantly waves of panic selling. What we want to know is when everybody finally covers their shorts and creates these buying feeding frenzies, and the market pushes up into resistance, and then becomes a FOMO indicator, and just it moves percentage-wise so far so quick. And it usually means bargain hunters are going to step in and sell the market. So that's kind of that view of how I break it down from weekly to daily to 30-minute. And of course, these panic selling indicators also tell us when probably you are feeling nervous. And these FOMO indicators when they're spiking are also when you're probably feeling like if you're not long or you're not in a trade that you're missing out and you want to take advantage of it, you want to make more money. That is what happens when red goes up. People get very anxious that they want to make more money. The market's going up. FOMO is a very painful thing to experience if you're driven by it, or more so, it controls your thinking. So I had a couple questions yesterday about we were talking about the XLE and how eventually we're looking for this trend to more or less finish going up and then start going down. And then, of course, we need the stock market to give us a sell signal to potentially take advantage of a falling energy pricing kind of divergence. So we have seen energy stocks moving up and to the right. If we were to look at crude oil energy or crude oil pricing, more or less, other than this giant spike, we'll just get rid of that. Energy pricing or oil has been going down. There's huge divergence in what's going on there. And again, if we look at this is a play that we've talked about and followed for a long time, and it just goes to show how long it can take for the markets to change direction. But we have been looking for a big break to the downside and then for a reaction up and for it to eventually stall out and roll over. And we could take advantage of a falling market if the stock market gives us a sell signal. And the sell signal for the stock market will be something like this, where we get red bars on the QQQ or on the SPY, and it says, hey, the trend has turned down. The stock market is now in a downtrend. It's a sell signal for the stock market, which means stocks in general should go down. And this has an opportunity, I think, for a big unwinding and a huge drop. And we can play an inverse ETF on there as a discretionary trade. So just a small side trade is not part of our ACS strategy. It's just something that we'll do to have some action, to try to squeeze some profits out. Again, it's got potentially 25, 35+% return in a fairly short period of window. It's a 2x ETF. ERY is the symbol, which is what most people have been asking, is what is that symbol? As you can see, you don't want to hold leveraged ETFs. They can lose a lot of value. But in the grand scheme of things, this chart doesn't look very good. It naturally is bouncing and losing value. That's why they're very dangerous. We don't chart ever with a leveraged ETF. We always go to the core sector or the futures market for the asset that we're following, and then you trade an ETF based on that. So this doesn't have the same looking chart pattern as what we see in ERY, but if the energy space drops, we're going to see this shoot up and really take off, and this will be a play. So this is a 2x ETF. Just be sure it carries a ton of risk, meaning it moves fast, and I don't know if there is a single inverse. I'm not a fan of 2x or 3x. I'd rather have no leverage and just play the move itself. But overall, that's I think this is the only option at this point. So again, you'd cut your position size in half. Whatever you think you're comfortable with, cut it in half again. Because it's 2x and the market moves quickly. People just always seem to over-position. They take a huge loss if something goes against them. They didn't realize how much risk a lot of positions actually have. Let's take a quick look over at Bitcoin. A few of you have been wanting more updates on Bitcoin. I think I updated on it yesterday. Again, not a whole lot has changed at all. I'm not actually overly excited about it. Actually, I think I went over this in pretty good detail in yesterday's video. So long story short, it does have a bull flag pattern. It is trading through previous significant highs. It's trying to digest all of this. It is pointing to nice short-term wise, it's pointing to higher pricing. It's on a nice trajectory. If the stock market does pop and move higher, which it is in an uptrend and primed and ready to do at pretty much at any point, considering we actually had panic selling in the stock market 2 days ago, it kind of is a mini reset. So the market is about ready to potentially pop. We should see Bitcoin move higher with it. In the grand scheme of things, again, we got long Bitcoin somewhere back over here. We hit one target, two target. Now we are just waiting for that next push. And we don't really, we care where it goes, but at this point, it's just it's a free trade. We're trading with IBIT with the BAN strategy, BAN, the best asset now strategy. If you are trading that strategy, and it's just a free trade. If it rolls over, it's going to hit our protective stop. We get kicked out. We lock in gains because we've already locked in profits and our stop is up. If it takes off and runs, we're going to hit more gains and continue to lock in more profits there. And so it's just one of those perfect situations. These are the types of trades we like to get in. It's what we're in with the S&P 500, which is we're deep in the money. We've hit targets. We're deep in the money with QQQ, up about 14% or so, deep in the money, hitting targets, and it doesn't really matter what happens. Ideally, we'd like it to keep going up so we can hit more targets, pull off more money, lock in more gains, move our stops up. But if it rolls over, it's still going to be a winning trade. We don't have to worry anymore, and that is the whole point of this strategy, is to position ourselves in a way where we quickly eliminate our risk, we have upside potential, and we're taking advantage of the underlying trends. And that's kind of where we're at the moment. And yesterday I did show, I'm just back on the XLE chart, how the market works its way up, and then eventually it starts to put in a topping phase, and then it starts to break down, and how it can work itself down that channel. We talked about how this is in the book, Technical Trading Mastery, how to identify trends and how they can unfold. And this is what we're looking for here. We had the breakdown in the energy space. Now we got the bounce back up into this resistance, into these highs. And we just have to let the market unfold, do what it's going to do, and see if we get a trade set up to the downside. Doesn't mean we're going to get it. It just means we're getting closer to a potential trade here. But we really have to let the charts in the market do all the work and just tell us what to do, and we follow suit. And again, you can always get the book. If you want to learn about it, we're actually doing an update on it right now. Hopefully in a week, an updated version of this book will be out with all of the key moving averages that we use, how to use this 30-minute chart, how to set up these indicators, how to set up the overbought, oversold indicators for the indices like the S&P 500 and the NASDAQ, which is what it's really dialed in for, is to understand these market conditions. And yeah, that's about it. Today I'll be heading out here shortly with my daughter and her friend. We are going to see Red Clay Strays. You should go to their website, Red Clay Strays. Check them out. Amazing band they are playing. So I will be gone. I won't be back till about 2 a.m., maybe even 3 a.m. in the morning. But it's my daughter's first. She's 15. It's her first rock concert. And there's actually a few other really good bands playing. So I'm excited to go have some fun and let loose and have some fun with my daughter there. So anyways, that's it for now. Take care. Bye-bye.